Welcome to the WTR Small Cap Spotlight Podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's podcast episode, I'm being joined by Bill Alessi, founder and CEO, and Chris Chumas, Chief Strategy Officer at Alpha Modus Corp, NASDAQ ticker symbol AMOD. The company engages in creating, developing, and licensing data-driven technologies to enhance consumers' in-store digital experiences at the point of decision. By identifying consumer behavior and product interaction in real time, businesses can curate tailored marketing solutions that cater to the specific and immediate needs of a shopper at the key moment when they ponder whether or not to make a purchase. Also joining us is my WTR Technology Equity Research colleague and AI guru, James Kisner. Good morning, gentlemen, and thanks for joining.
Thanks for having us.
Good morning. Yeah, thanks for having us.
Bill and Chris, for listeners new to AMOD, the company describes itself as revolutionizing retail with smart technology. Can you start by sharing the company's mission and long-term vision for transforming retail and digital commerce, please?
Sure. So Alpha Modus has positioned itself as a super aggregator in the AI and data analytics space for specifically for brick and mortar retail. Lots of companies and startups are focused on this space. It's set to surpass 110 billion or so by 2027. So what Alpha Modus does is we have a set of technology patents that are method patents. So it's only specific to use case. We leverage those to find partners in the space and we bring them into our ecosystem. That ecosystem, when someone comes in and partners with us, they get a sales team, they get support, they get field services, and even financing if necessary to help them scale.
Excellent. Thanks for that overview. And I'm now going to turn the podcast over to James Kisner to ask a few questions.
So, gentlemen, could you talk more about the role that the patent portfolio that you alluded to and how that plays in creating a competitive advantage for your company and creates long-term monetization opportunities?
Yeah, so our patent portfolio, as Chris mentioned, it's a method portfolio, which means that the IP covers the method in which applications are being deployed. It's agnostic from the technology or technology provider standpoint. It's not about software. It's not about hardware. It's about the method in play. And the role that patent portfolio plays is critical in that it protects our rights as early inventors going back to 2013 before AI was today's AI. It was deep analytics on metadata around the consumer. So the patent portfolio is a huge competitive advantage to us, and it has open prosecution with the first patents expiring in 2035. So we have a long-term runway to monetize this set of patents.
That's really helpful. But how do you see the balance between IP licensing versus direct deployment of your retail technologies as a revenue model?
It's a great question. IP licensing. We started as a service provider, close to 10 years ago in the retail space. And as a small startup, it was very challenging to win enterprise sales, with a thinly funded, or self-funded startup, soliciting services to, retail giants and brands. So the balance between IP licensing versus direct deployment, that really comes into play. Like we find a client, a prospective client that can take advantage of solutions that are provided by other tech collaborators in our ecosystem, and we resell those services to a direct deployment of these assets, of these retail technologies. Those that have their own internal technologies that overlap what our patent covers, we would just seek a license from them. But our goal is to sell services and first adopt services of our ecosystem partners that fall under the realm of our patent coverage, and then license those retail technologies across the aisle to enterprise clients in the retail sector or brands in the retail sector. So it's kind of harmonious. The licensing and ecosystem direct development partnerships, they go hand in hand.
Thank you for highlighting those nuances. That's helpful. Let's talk about use cases for a minute. So you've highlighted some AI-driven use cases like real-time inventory management, dynamic ads, and theft prevention. How are your solutions differentiated from competitors in those spaces?
So in this space, we, as we've mentioned, we hold 10 plus patents covering the variety of use cases dating back to 2014. That's really our competitive differentiator, number one, and first and foremost, as we build out, our licensing business. From there, how we deploy those use cases is really through the ecosystem services that we provide to our partners. So, example, as a small startup comes in and fulfills one of these use cases, such as, let's say, smart displays. But they can't compete with the larger companies in the space and the larger CMS in-house media companies that are spinning up that you're seeing in retail. So we're able to back these guys with large field services resources, financing, and we also have a very senior sales team that has a pretty deep Rolodex in the retail space.
Thanks, Chris. I appreciate that. So you guys are also, Alpha Modus is also developing financial service kiosks for underbanked populations. And I understand it's a market that's growing at a nearly 19% CAGR. So how big of a revenue driver can this be for your company?
Yeah, that's so this is an interesting solution for us because on the surface, it kind of seems like it's out of the wheelhouse of AI. However, there's 60 million households roughly in America that do not have bank accounts today. So we're partnering with retailers to deploy these kiosks that'll provide all sorts of services to that underbanked community, allowing them to get a prepaid reloadable debit card and connecting them to services they use every day, such as bill pay, mobile top up, gift cards, check cashing, and money transfer. But where it takes a step forward, beyond those revenue streams that we'll get from just those services themselves, where it takes a step forward in bridging back into our patent portfolio, is now we have data on those people that we didn't have spending data on before. All the kiosks have cameras, and we can actually sell ad space after a transaction is complete, depending on where the kiosk is located and which retailer it's in, and different demographical and metadata that we have on the customers. So we anticipate that this new solution coming into 2026 will be a big revenue driver for us as we begin the rollouts.
That sounds very exciting. Let's shift to partnerships. I think you alluded to. They seem central to your model. Could you share how collaborations like the one with VSBLTY enhance your value proposition?
Absolutely. So the partner ecosystem is actually essential to our business model, and VSBLTY is an interesting use case. They started out as an adversary. We were in a lawsuit with them, which we ended up with a license agreement as well as a reseller agreement. Now, what that does for a small startup like VSBLTY, who at its heart is really a software development company, it gives them the tools to be able to expand. So today, VSBLTY is only in 100 retail locations. Immediately, our sales team identified, a very big pipeline for them and how we could expand at 500 to 1,000 locations relatively quickly. As you can imagine, for a small startup, that can be scary because that's, a big financial burden. They don't have the resources and things like that. So we're able to marry them with service providers that we work with, as well as back those deployments and help them to scale faster and really to get back to what they do best, which is the software development.
That's great. Thank you for that. In general, how do you approach selecting strategic partners? What's the mix of technology synergy, customer reach, or revenue potential?
So when we're approaching a partner and when we look at what we need, we can start with our customers and opportunities that we're hearing in the field. Some of our service providers, they hear of opportunities and different use cases and ask if we can help with that. So what we try to do is we look at the portfolio of IP that we have with the patents and make sure we can find solutions that fit each use case. So if I need a smart screen provider, I have that through VSBLTY. Kiosks, we have it through a Genmega partnership, and so on. So we want to make sure that we can kind of cover all of these areas, just like a value-added reseller would do, but with the know-how to do the implementation and the scaling, which is really where we bring in that value. And we can really help grow those smaller startups.
Great, thanks for that. So let's just turn to a bigger picture question. What are the key financial metrics investors should be paying closest attention to as you scale?
One, I've led the company, from a financial standpoint. I have a background, an extensive background in the financial markets, and I've prepared this company to go public over the past 5 years. I prepared it to go public in a very lean manner. I believe in very tight spending, nothing frivolous, and we have a very low operational expense forward. Being public is probably our biggest expense. That's not attributable to revenue. So the key financial metrics is we operate lean and mean, hands down lean and mean. We're in a space that we pretty much own the IP, and it's at its infancy stage. Although AI is all the rave, it is at its infancy stage. And the adoption of our technology that's going to drive immediate revenue is probably the key financial metric that anyone would want to see, like revenue-facing announcements. We have enforcement campaigns going on. We have partnerships that we're signing. But we're at this point where I've coined us a 10-year-old startup. We're at this point where we are finally coming to revenue. And that revenue is royalty-based, whether it's through litigation and awards, and that would be the awards would be forward-facing revenue, or it's going to be new signings on deployments, like our financial service kiosks that are being deployed currently, underway to the underbanked. It all starts with small incremental unit by unit, ad by ad basis of revenue, small revenue that we own that will grow exponentially. So when the retail street and the investment community see consistent announcement on forward deployments of our technology or forward deployments of ecosystem partner technologies that are layered into our IP, that says it all. Because in a world where tech firms don't necessarily need to make money to be a success, I happen to believe just the opposite. Our success on driving revenue is going to dictate our key financial matrix of the stock trading higher and more investors coming into it. So I'm fully aware of that. And that's pretty much what I think the investing community should hold our feet to the fire on and hold us accountable for, and that is forward-facing revenue. Probably the one key financial metric that I would focus on.
I'm sure investors will love that answer. Maybe your private equity background is showing there. That's great. So
a company needs to make money.
I love it. So yeah, imagine that, a tech company making money. That's insane. Yeah. So looking ahead, what are Alpha Modus's top 2 to 3 strategic priorities for FY26 and beyond?
So this is a real quick answer, straight away. Our first major deployment is already underway. It is deploying these financial kiosks to serve the unbanked populations. It's a huge market. I think the number 69 million households in America are categorized as underbanked or unbanked. And that inflation is growing, like you said earlier, 19%. So it's a big revenue driver. And we have the tech partners and the retail partners around us on that. So number one, deploy kiosks, the financial service kiosks. Number two, find partners and keep expanding our ecosystem. Every partner that is added into our ecosystem that we can give a blanket of IP coverage through our IP portfolio, we can give them IP coverage. It's more growth for us internally. So partnerships in our ecosystem is the second big driver. And the third is those that are unwilling to work with us, or just not in the realm of playing ball with us. They'll be met with enforcement actions. If a company infringes, they will be met with an action if there's no if the talks are exhausted. So those are our three driving points.
Gosh, so I got one more question here, and I think you kind of alluded to a lot of this in your last answer, but maybe you can kind of tighten this up to more of an elevator long-term investor pitch. Just, why should investors see Alpha Modus as a compelling opportunity in the retail tech space?
So that was a great question. Alpha Modus is building the backbone of AI-driven retail intelligence. We're positioned at the intersection of computer vision, behavioral analytics, and monetizable retail media. The company's technology enables retailers and brands to understand and influence consumers right in their physical stores with the same precision as online platforms. Basically unlocking multi-billion-dollar opportunity traditionally reserved for e-commerce giants. Now, we control a growing portfolio of foundational patents covering AI, computer vision, audience measurements, data retail monetization, technologies that underpin nearly every modern smart source or retail media deployment today. These patents aren't theoretical. They're target real-world use cases already deployed by major retailers and tech giants, giving Alpha Modus unique leverage across a rapidly consolidating sector. We have 10 plus patents with open prosecution, and we have proven ability to convert litigation into strategic licensing and revenue sharing agreements, as we've done so with visibility. Now, Alpha Modus has evolved far beyond the enforcement into execution. So, a year ago, filing some lawsuits. Now it's ending with strategic partnerships and licensing forward. We've signed a deal with a major tech firm, a master service agreement with a major technology provider that's going to assist in the deployment of these financial kiosks at a retail giant that's soon to be announced. We've signed a deal with Shelf 9, as publicly been written, and we're deploying. We're deploying Shelf 9 assets, and our goal is to have Shelf 9 smart shelving, a component that's a big revenue driver in our ecosystem. As well as we signed a deal with Genmega. Genmega is not a small company. They're headquartered in Seoul, Korea, which I visited the team there this summer, and they have U.S. operations here in Dallas. They're one of the largest ATM manufacturers in the world. I mean, and they are housing our technology on the financial kiosks. So the market we're talking about, it's multiple markets colliding. The retail media network market, 60 billion plus currently. Smart retail AI analytics, over 36 billion, and retail kiosks and fintech, over 30 billion. So we're talking about big numbers here and big partnerships we have, and it will lead to more rollout, consistently with putting my feet to the fire, revenue generating rollout. Now, take that aligned with the vision I have on managing a company's financial output and the long-term vision of our company. I'd say the takeaway is, in a world where digital ad tech is colliding with physical retail, Alpha Modus owns the rails. Its IP foundation, its enterprise partners, and the capital discipline we have create a rare asymmetrical setup: micro cap entry point, micro scale opportunity. Alpha Modus isn't following the AI retail revolution. I believe it's defining it, and that's
that summarizes my thoughts.
Bill, that's amazing. I mean, so many good things, focus on AI, defensible, IP and ecosystem, what's not to like. So thanks for joining us. I'll pass this back to Tim, our host.
Thank you for joining us
today,
Bill Alessi, excuse me, and Chris Chumas of Alpha Modus Corp, NASDAQ ticker symbol AMOD. And thanks to my equity research colleague, James Kisner, for also joining us. And lastly, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick. Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, and conference schedules. We will see you next time for another edition of the WTR Small Cap Spotlight podcast.
Thank you, Tim.